So traders, are we about to see a bit more of a short-term weakness out of the actual indices right now? Been doing some analysis from there. We may be getting ready for another short-term drop, but I believe it's going to be a slingshot pattern that's going to be setting up. Plus also, there's something that's forming right now when it comes to the gold and silver market that I want to share with you. But also what I want to share with you one trading technique that I use when it comes to understanding the momentum of these markets. And whenever we start to get weak momentum, we tend to start to get reversals, and we can keep an eye out for that reversal. And I want to share exactly how to identify that on the chart for yourself, so you can utilize that into next year as well too. All right, guys? So anyway, guys, don't do anything I do. Don't place a trade based on what you see in this video today, guys. Because there's no guarantees, right? And from an actual let's actually start off with this here. From an actual trading point of view, guys, it's so important to protect your downside, right? The number one thing that switched me with my trading over the last 20 years is my number one thing. Every single time I get into a position, I'm thinking about, if this is a losing trade, am I protecting myself? And once I've got that covered, my account seems to grow. Whenever I was focusing and just on, loading up massively to try to make a big profit on every trade, you guys have been there, right? It's like, it just doesn't work, does it? So anyway, let's actually get into the actual, I'm looking at this stock here right now. Let's go look at the actual stock market here, right? So let's actually blow this up here. So I was doing some analysis just recently on the stock market, and here's the really interesting thing that I'm noticing when it comes to the stock market and so on and so forth. So one thing that I do see that happens time and time again throughout the markets here is the whole analogy: when people are fearful, be greedy; when people are greedy, be fearful, right? So look at this here. We still are at the fear level. We were at this graph here is we were just below the 25, and that was the extreme fear, right? Extreme fear. Now, if you understand the stock market, the psychology of the stock market, and one of the traders, why a lot of traders who enter this world of trading, they just don't get this, and it confuses the crap out of them. When like, oh my goodness, there was so much bullish sentiment, and everyone was talking out bullish, yet it went down. Or everyone is fearful, all the YouTube videos saying the crash is going to happen, and the bottom happened, it went up, right? So that's the psychology of the markets, right? And this is where most people in this world are followers, like they want to follow everyone. And it takes an independent thinker to say, okay, I'm seeing a lot of bullishness right now. And this is what actually happened with gold this year, right? We all saw it. So many people on the gold, right? They're still on the gold right now. And that's where I just knew, like, I've been bullish gold this entire year, but now we're starting to get that frothiness of, my goodness, there's so much bullish sentiment out there around this here. Therefore, we're probably going to stall out a little bit, or get a bit of a drop here, right? So, and this is what actually happens, right? When things get too overheated, we get too greedy. That's when you get the people coming in and so on and so forth. And you saw this happen. You see this happen with every single market, right? And you see this is one of the reasons why you're seeing crypto right now really sort of flattening out. If you understand that from a mindset point of view, you can go into it, have an independent thinking of what is happening right now. I'm seeing Bitcoin broke out 100,000, and then suddenly you start to get the $1 million targets come out again and all that sort of stuff, right? So the purpose of me saying what I'm saying right now is we see this down through here, and we did pop down below 25, which basically simply means extreme fear. Now remember, what does that mean in the market itself, right? When there's extreme fear, when everyone is fearful, time to be greedy, right? We're probably going to form a bottom. When we start to get to the extreme greed level, that's when you're like, now there's a short-term swings, right? Because the market will go down, right? The market will go down. Would start to get this sort of action coming through here. That the stock market will start to come down, right? And then we get the reversal for a few weeks, maybe for a month or two, right? We start to get the movement up and so on and so forth, right? So this is for the short-term I say short term over the next, couple of months or so, right? So we see that through there, and then we can see we're at this fear level. So there's still a lot of fear in the marketplace. So when I actually then, if I take this off now and I bring up my actual charts here, I'm noticing that there's a few trend lines that I'm noticing on the indices that could be coming into play right now. I don't see a really big crash coming, not just yet anyway. We will eventually, right? And I'm saying not just yet because there's still a lot of fear in the marketplace. Big crashes don't tend to come from that there. Anyway, so by looking at the actual stock market itself, if I blow this chart up here, this is the Dow Jones. Look where we are. So if we did get a little bit more of a short-term drop to the downside, that's probably going to be that short-term drop before we see at least a bit of a slingshot move coming back to the upside, right? If I go to the IWM, which is the King Russell, baby, right? King Russell. We have this low here. We have this low point through here. So if we do get a little bit more to the downside, it's probably going to be point to the downside, and we're probably going to see a movement back up, right? S&P 500, we're actually pretty far away from this major trend line through here. So if we do get a bit more of a drop to the downside, we may get another 2 or 3 or 4% drop to the downside before we start to see that coming into play. And then obviously the NASDAQ as well too. The NASDAQ, I'm not sure about the actual trend lines. Let me actually just draw. How I do my trend lines, guys, is one, I don't like to have a lot of trend lines on my chart. You probably realize that, if I take this trend line off the screen, what do I have here? It's actually a white background, one moving average. Most of the time I'm using it, and then the chart itself, right? So if I utilize, but if I'm trying to see what's relevant to the price action today using trend lines, then what I would do is I will just start to connect major lows and major highs, right? So I can see that point through there. I can also see there may be something going on through there, right? We see that point through there as well too, right? And we have this, so this actually, that there could definitely be something coming up if it does eventuate and so on and so forth, right? And then we have this bit more of we can see that through there, but then we also have this more of a shorter term trend line through here. And we can definitely see that was through there. It's probably broken, hasn't it? So there's probably nothing through there that I can utilize when it comes to an actual trend line for me to use. So that's probably what we can work with right now on the NASDAQ. There's nothing too clear here on the NASDAQ when it comes to an actual trend line, right? So, but for the other indices, once again, the Dow Jones, we can see that through there. We have the Russell, and we also have the S&P 500. So we have these through here, right? And we can see that if we do get a bit more of a drop to the downside, we're probably going to likely to see probably that short-term little, or what I call a shake and bake, and a short-term little pullback before the slingshot pattern starts to form in the markets there. So one of the big things I promised you at the start of this video was looking at the gold and silver prices here. And this is where I want you to keep an eye on. Whenever I'm trading the markets, I always like to look at multiple time frames to get a good picture on to get a good view on what's happening with that picture. Now, what do I mean by that? Whenever I'm trading say for example on the stock market, most of my trading is done in half an hour per day, right? So it's done in half an hour per day. And how I do that is I have my trading set up that I look for, and I have scans to help me find that trade. And so that's what my trading consists of, right? It's really, really simple. I'm viewing the stock market. I have scans to view all the stocks in the stock market, and then I'm looking for trades from there. If you'd like to learn more about what I actually do, and maybe actually if you want to join my actual 12-month coaching program where I'm with you every week for a whole 12 months, then there should be a link in the description there. Or go to getjohnshelp.com and you can see all the details about my Inner Circle 12-month coaching program that I'm about to close soon. But the purpose of me bringing that up here is that I'm always looking at two time frames here. But I'm looking at the gold chart here, right? So I was looking at the gold chart recently. I'm just like, okay, so this is the gold chart here. I've got two moving averages on here. And what's happening right now is we're at that phase where most traders who are trading this phase are getting chewed up, right? Whenever we start to get the moving average flattening out, guess what happens? A lot of volatility, right? Up and down, up and down. It's where a lot of traders are getting chewed up right now. The best trades are when we start to get the moving averages trending, right? Because When that happens, guess what's happening? Now we're starting to get what? Now we're starting to get a trending market, and then we can jump on that, right? When we have trend, which is highs and lows, and we start to use the moving average is like a momentum indicator for me, right? And when the momentum is really starting to pick up in one direction, either up or down, then we want to start to go with that, because that is now what I'm trading with momentum, right? It's like a surfer. You want to wait for there's momentum building up and building up and building up and building up with a wave, right? And then bam, you jump on the wave and you go with the wave. The wave just takes you. Well, if you try to jump on, if you're a surfer and you know that there's actually no real good sort of momentum building of wave, you're going to try to capture it and you're going to kind of die out really quickly, right? Or what happens to me sometimes is, you might get dumped, right? It might be a dumper. it's like, oh man, that hurt. Anyway, so I'm always looking at this level here. So we definitely know what's happening here. So on a much more of a shorter term level, if I bring up now the 4-hour chart, look what's happening. So this is gold here, okay? Look what's happening here on the 4-hour chart. And now I'm starting to go a little bit more deeper here, but we can see we actually had this sort of resistance up through here around 2,720, and then we pop down. But look at this here. When we start to get like I call it like someone clearly in control. And what that means is when we start to get this here, sometimes we can get the buyers and sellers fighting it out, right? We get a strong move down and a strong move up. What's this all about? It's like we had a strong selling leg and a strong buying leg. I'm not too, their buyers and sellers are fighting it out, right? But look what's happening here right now. We came down and now we're just coming across through there. So looks like to me with gold, we're starting to get this through, and we're already starting to get this roll. And again, these are 4-hour bars through here, through our candles through here. So it looks like we're starting to get that rollover right now. So it looks like to me, if I bring up this now, this is the hourly chart now, and you can see how that it's very, 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 very weak to the upside, right? So what I mean by that is we came down, but we're just slowly going up through here. So to me, it looks like this, if I'm looking at these bottom two charts here, right? To me, it looks like that, especially this 4-hour chart, looks like we're trying to roll over here on this hourly chart. And if we do, then if we do start to roll over, we start to get a bit more movement on the downside, then it looks like gold is probably going to start to head back down towards its lows, which would be down through here somewhere on the gold price, right? Now, again, this is just short-term movement. If we look at that from the daily chart, all I'm talking about is just movement on the downside, right? So this is short-term, real short-term stuff here. I don't expect a really big crash to come out of gold, but from a short-term technical analysis, guys, we did break down past this. We had this major level support. It broke down. It's coming back up. If we start to get the rolling over effect on the silver price, gold price, then we can start to see probably a movement down towards that 2,550 level from there. Let's go look at silver as well too. And silver's doing pretty much the same sort of thing as well when it comes to just being totally weak, right? So if I bring up this 4-hour chart, look at this 4-hour chart, right? This actually there was actually a lot of support around this $30 level. Support all through here, right? So there's actually a lot of support through that level from there. So what actually happened is this. So look, check this out. We actually broke down past support, and now so far anyway, we've had one significant, and then we've actually had, now again, these are 4-hour candles. 1, 2, 3, 4, 5, 6 4-hour candles rejecting it, and now we're rolling over from here. Right, so just by looking at this level through here, if we do start to continue down here a little bit more, we start to get a little bit momentum on the downside, then we could possibly start to see, I'm just looking at the support and resistance levels. Yeah, we could possibly start to see this coming down through to, say, here somewhere around about the, say, $26 level, somewhere over there, out of this. And that, what that would look like on the actual daily chart is just this here, and you can see what's happening through all that through there, right? Which is just, that was the support level there for a while. We pop back up, and now we're actually starting to really roll down now on a more significant level. If I bring this down from a trend line perspective, right, from there to there, As you can see, look at that through there. That was a resistance, complete rejection, and now we're pushing through to the downside. So one thing I really want to, just an update on oil as well too, guys, just so you guys know. One of the hardest things about trading the markets is being patient, right? I always say patience out and patience in. Patience out means you're just sitting on the sidelines and you're waiting. And that's always the hardest thing, right? It's just sitting there waiting, like, oh, there's no trades for a whole week. Or there's no trades. I think last year I had 6 weeks with no trades, right? Now, people are like, 6 weeks with no trades? How can you handle that? Well, if you go to getjohntop.com, there should be a link in the description. I show you my real equity curve and show you that by having patience throughout the year, sometimes you can actually have a pretty good year throughout that, right? So I say patience out, and then when you're in a good trade, like I'm in two good trades right now, just be patient in, right? I've been in there now for a couple of weeks and just letting them go, right? Be patience out, patience in. And the purpose of me saying that is that looking at this really big oil chart, this now to me is patience out, right? Don't get involved with this thing. It's up and down, very volatile. Again, anyone that's trying to trade this here right now is being getting chewed up big time from here. If we go look at this actual weekly chart here, and this is where, guys, remember saying before through this video, is that it's always important to keep an eye on what say multiple time frames, right? So daily charts can give you a lot of mess, a lot of noise, should I say? But by looking at the weekly charts, the weekly chart can give you a lot less noise and give you a clear picture on what's still happening right now. Again, the short-term movement, and this is where, like, if I draw this up here, this is where a lot of traders, one of the best things you'll see that most successful traders say is use multiple time frames and trade with the trend. And my mentor always used to say, trade with the trend, trade with the trend, trade with the trend. Don't trade against the trend. And what he was saying is trade against the higher time frame, higher, right? So everything goes up, right? So if you're looking for good entries on the daily charts, then never trade against that weekly chart higher time frame trend, right? That's because that's where if you're trading with that big trend, the big momentum, right? Daily charts can give you a lot of noise, but never want to trade against that higher time frame trend. That's where, like, if I'm, some of my private clients that I coach, some of them do trade the 5-minute charts, 15-minute charts. I always teach them to never trade against the 15-minute, especially the 60-minute. Never trade against those things. In fact, use that as your advantage to have a momentum push when you start to look at, say, a 2-minute chart or a 5-minute chart entry signal, and that can give you a really good momentum push because you're trading with that over momentum. And the purpose of me saying that is one of the big rules for momentum is never trade against the trend. And that's, say, for example, here with oil. If you have a look at what's happening with oil here and with what's been happening, the trend is still massively on the downside. So trying to go long right now would be very, very, very risky on oil because we're still making these lows and a lower high and a lower high and a lower high, right? And then what I like to do is I like to confirm it. I like to then overlay. So that's the lower highs, but then I like to see what's happening with the momentum side of things, with the moving average. And the moving average is still trending down. So even though we're getting a lot of volatility all through here, the momentum still is on the downside from here. And it's just creating a lot of volatility. If indeed if we do start to get that break to the downside. So if we look at this from this chart here, actually, you know what? This bottom chart here, let's actually do this here. So I'm going to bring this up through to here for a minute. I'm going to bring you up here for a minute. And so if we do start to get something like this going on, right? Like something like that going on, that's going to be like, let's see if I can sink in. Okay, there we go. There, right? Look at that through there. If this got a breakdown bar through here, that's probably going to be the trigger to start a really significant sell-off in oil, because we've just done nothing of just look at all this sideways movement. So there could be something really significant coming up with oil right now, and it's right now I'm out, patience out. But then once I wait for my trigger, right, and my trigger is I'm waiting for my actual proper entry signal, because this is the entry signal here, right? Let me just squeeze up here, right? That'll be the trigger. That'll be the trigger to say we're probably getting ready to the downside. And then again, if this is the weekly chart and we bring this up through here, right, that'll be the trigger there. If that happens, then it's probably going to start to see movement on the downside. But what you don't want to do is you don't want to get in early, right? So the way that I personally trade, and I give away a free trading course, guys, that link in the description there. First thing in the description, I give away a free trading course. And the very first video in that trading course, I actually teach you my trading system, my actual trading setup. And you'll notice that the way that I like to set up, the way that I like to trade, is I have my setup that I'm looking for, my actual pattern. But I know the exact candle I'm looking to get in on. So there's no should I be in, should I be out, and so on and so forth from there, right? If you want to learn that, I'll give that away for free in that course. And in a nutshell, I'm looking for something like this, right? I'm looking for my setup, and I'm looking for that breakaway bar, that movement to say we're now likely to be starting that move from there. Make sense? So bit of a knowledge, bit of a sort of education around that through there, guys. And this is the thing that I really like about the way that I trade, is because I'm not in an indecision. Should I be in now? Should I be out now? Where do I put my stop? To me, it's all the same thing, right? It's the setup. And then once I get my entry candle, I know the exact type of candle or type of bar that I'm actually looking for. Once I get that, I know exactly where I'm putting my stop losses. I know exactly where I'm going to be getting out. I know exactly how to then manage the trade to cut my losses short and let my wins run. That's the reason why I have a 12-month coaching program, by the way, guys, because there's different layers, right? There's understanding the setup, understanding the entry signal, and then having emotional control to let the profits run, and so on and so forth from there. Now, let me finish up here with you guys, and let me go to, I'm going to bring up the Russell. I was looking at the Russell recently, I'm like, oh, I can really teach you guys this. Sometimes we can have trend analysis, right? So trend analysis is what? Highs and lows, right? So we have upward trend through here, and we have downward trend through here, right? And we can also have upward trend from here. Now, one thing I like to do is sometimes the market will start to give us a bit more of a clue of, yes, we're in an upward trend right now, but it's very weak upward trend, and we could be getting ready for a reversal soon. And the one thing that I like to do myself is I like to use the moving average, right? So look at this here. If I bring this up through to here, right, look at this here. See how strong that was to the upside? Look how strong that is to the upside there. Look how strong that is to the upside there, right? So if I'm looking at the buying legs now, okay, where the buyers actually took control. Buying leg. I'm looking at the selling leg right now, and you understand the reason why. Because if I'm looking at, this is the last buying leg through here, right? That's that last buying leg through there. But notice what's happened through here. Look at that. Now, notice the angle, and I'm going a bit more advanced on you guys here, but when you start to understand the stuff that I teach, because again, part of what I do as a coach is not just teach you trading setups, it's like understanding these markets, like these techniques I'm using. So you can say, oh, this is probably going to be if you're trading the shorter term charts, there's probably going to be a drop coming soon, right? So, and again, if you look at it through there, and one thing that I like to do is I like to use the angles, right? So if I bring that up through there, that's that level through there. Let me clone you and let me go to here. That was actually a lot steeper through there, right? Let me clone you again. That was obviously a lot steeper through there, or that was obviously steep through there, right? But then now we can see these are the buying legs, right? They're the big, strong buying legs. But if I use this, see that the angle is more vertical. But if I now go and copy and create a trend line and then go over here and go to this last movement up, notice how the angle is a lot different, right? That's the angles there, right? Same angle. Pretty strong, same sort of angle through there, but now it's happening through there. Now if I bring this down and I bring it up to the actual angle itself, right, over the moving average, look what we start to get. Let me actually then, now what I want to do is I want to then create let me see if I can change this here to, let's go to blue, right? Now, the blue. Now what I want to do is I'm going to bring this over here and see how the moving average was. This here was a lot lot more flatter, if you're going to call it that, right? It was this here compared to that, compared to that, you know, compared to this here. And so what that tells you is whenever we start to get like really good, strong moving averages, almost vertical or nice, good 45 degrees on the charts, we start to get good trending markets, right? If I bring up an example of what I'm talking about here, then if we go to gold, right? Notice through here, there we go, cool. Right, notice this is what I'm talking about. See how the moving averages are nicely trending up through there, nicely trending up, nicely trending up. Like that's what I'm talking about when they're nicely trending up from there, right? So now we can see if we go back to the Russell, and again, this is just something on the short-term charts, but you can apply this to any time frame out there, right? We can see now that this here was actually quite weak on the upside. So whenever I'm looking at, again, I'm going a bit more advanced on you guys here, apart from just analysis, but when you start to understand these markets on a deeper level, you can see like, okay, this is moving through here. In the past, the buying legs have been quite strong through here, but now this last buying leg is very, very, very weak to the upside. What does that mean? Well, we're probably going to start to get things like false breakout moves and so on and so forth. Now, what does that mean? That means, as you can see through here, why did this resistance, why did this breakout create a false breakout and then a big drop to the downside on this hourly chart? And then you can start to go to the 5-minute charts and see this big drop on the downside, the 15-minute charts. Why did we get this sell-off through here? Remember I said before, trading, looking at the multiple time frames, right? So if we look at this hourly chart, we started to get this here. What was the sign of this not probably being a very strong move? It was the moving average more of a flatter compared to all the other moves. And so that was telling you that this is actually called slowing. The market's actually slowing down. There's not a lot of strength in this upward trend. And it's probably going to end, or we're probably going to get a reversal soon in the market.